134, Interim Financial Reporting, is an accounting standard used to prepare financial report for periods shorter than a full financial year, such as quarterly, bi-monthly, or semi-annual report. The purpose of this standard is to provide timely and relevant financial information to users, so they do not need to wait until the end of the year. Under MFRS 134, companies are required to present minimum financial information and apply consistent accounting principles as used in annual financial statement. Although interim reports are usually unaudited and involve more estimate, they remain important because they help users evaluate the company's performance continuously. Overall, MFRS 134 ensures companies provide regular financial updates throughout the year.
One significant event is the expansion of the outlet network of 99 Speedmart Retail Holding Berhad, where the number of stores increased to approximately 2,966 outlets. This expansion is directly linked to the increase in revenue, which rose to about 3,037.8 million compared to 2,550.2 million in the corresponding period. The increase is primarily driven by a higher number of sale transactions, broader market coverage, and sustained demand for daily essential goods. Nascent consumers increasingly prefer affordable and convenient neighborhood shopping, which has further raised demand for the company product. Consequently, the expansion not only increased in revenue performance but also affect their financial position by increasing the non-current asset and operating costs such as rental and staff expenses.
Another significant event during the interim period for 99 Speedmart recorded an increase in cost of sale from 2,330.5 million in Q3 2024 to 2,709.5 million in Q3 2025. This was due to stronger customer demand, especially during Hari Raya Aidil Adha, when spending on food and household goods increased. To meet demand, the company increased inventory levels, which also raised current assets in the financial position.
Based on the interim financial report of 99 Speedmart, the reporting period for the third quarter ended is 31 December 2025. The income statement presents both 3-month quarter and the 12-month cumulative period, with comparison to the same period in 2024. This allows users to evaluate short-term performance for the company 99 Speedmart as well as year-to-date result. The statement of financial position is at 31 December 2025 compared with 31 December 2024, which is the last audited year ended to show changes in financial position. Meanwhile, the statement of changes in equity and cash flow are prepared on a year-to-date basis, which is from 1st January to 31st December 2025 with comparison to for the same period in 2024. This presentation follow MFRS 134, which requires interim report to include current and comparative period. This is important because it helps users to compare the company's performance and identify trends for better decision making.
MFRS 8 operating segment help user understand how a company really operates. Instead of viewing the business as one whole unit, the company is divided into smaller segments for clearer analysis. Under this standard, company must disclose information about their operating segment, including their business activity and financial performance. An operating segment is a part of the company that earns revenue, incurs expenses, and is regularly reviewed by the Chief Operating Decision Maker or CODM for performance evaluation and resource allocation. Furthermore, MFRS 8 uses a management approach, meaning the report segment information is based on internal report used by management. Therefore, user can view the company in the same way management does.
Next, we move. What is CODM? CODM is a person who is responsible for allocating resources to and assessing the performance of entities' operating segment. Usually, the CODM reviews segment information to make key business decisions and determine which activities constitute reportable segment. For example, for Nestle Berhad, the first one is Tan Sri Wan Zulkifli Wan Arifin is independent non-executive and chairman BOD and the members of audit and risk committee. And the next one is a Chin Kwai Fat, independent non-executive and then the chairman of the audit and risk committee. Basically, scope work and area of responsibility for CODM is allocate resources, deciding on how to invest the company resources across different segments. Other than that, evaluate performance assessment, regularly reviewing operating results, For example, profit or loss, revenue, and growth trends to evaluate performance at a disaggregated level. In contrast, for zone Euro was the only growing region, we say rising from $22,086 million in 2024 to $22,548 million in 2025, up 2.1%. The main reason for this growth was the strong economic performance of Eastern European market. Specifically, countries like France and Germany experienced lower unemployment and rising real wages. As a result, consumer purchasing power increased, leading to high demand for Nestle product. And then we're moving for zone Asia, Ocean and Africa. Sales decreased from $24,612 million in 2024 to $20,900 million in 2025, down for 2.5%. This was mainly due to economic challenge in Greater China, where sales fell more than 10%. Specifically, China's post-COVID economic recovery was slower than expected. Meanwhile, India and Philippines were relatively stable because their economies held up better. USA, Brazil and Mexico also lower sales, mainly due to weaker consumer demand. Let's carry on. As I attached above is the Nestle Berhad geographical and product segment. So, what is geo and product segment? Basically, geo segment is a part of a business that operates in a specific location and faces different risks and return compared to other regions. It's including Zone Americas, Zone Asia, Oceania, and Africa, and then the last one is Zone Europe. And then, as I attached above, is the Nestle Berhad sale by geographic area. As you can see, for Zone America, sales in US decreased from $44,656 million in 2024 to $40,958 million in 2025, a drop of 3.8%.
Next is product segment. Product segment under Mfrs 8 refers to reporting financial performance based on different product categories, allowing users to see each product contribution to overall result. In Nestle, the main segment include beverages, water, dairy, nutrition, prepared food, confectionery, and pet care. Among these, powder and liquid beverages and pet care generate the highest revenue, making them key drivers of performance. Overall, product segment reporting help users clearly identify which product lines are most profitable and important to the company.
Mfrs 8 is an accounting standard that requires companies to disclose financial information according to their operating segment based on how management internally review the business. This helps users better understand the company's performance and how resources are allocated. The first key benefit is that segmental reporting helps users better understand business performance by segment. So, based on the Nestle Malaysia Berhad report, the food and beverage segment recorded revenue of RM5,493,222, while the other segment recorded RM1,387,624. This clearly shows that food and beverage is the main contributor to the company's revenue. Without segmental reporting, users would not be able to identify which segment performed better. The second key benefit is that segmental reporting improves decision making. The report shows that food and beverage generated an operating profit of RM596,369 compared to RM167,149 for the other segment. This allows user, investor and management to evaluate the profitability of each segment and decide where to allocate resources more effectively. In conclusion, Mfrs 8 provides useful segmental information that help users understand business performance and make better economic decisions.